So I haven't done an InvestEngine portfolio update in a while. I've done that on purpose because honestly, I do the same thing every month. But anyway, there's been a few updates to the app and I wanted to show you my progress on the portfolio. InvestEngine is easily recommended by me. So if you wanted to sign up for free, make sure to use the link in the description down below. So as you can see, my total balance currently is £1,452.56. So every month I put in without fail £100 into InvestEngine and I choose which of these portfolio cards it goes into. So currently I am up by £77.52 in my overall InvestEngine portfolio, and this is the first time I've seen such a high number, and this is because of the stock market. It has gone back into a bear market, so all the stocks are actually rising and rising really fast. So if you guys know, this is the only portfolio that I have where I don't actually try to time the market, and that's something I don't recommend anyway. So in this video, I'm going to actually quickly show you all the different portfolios I have, all the different funds I have and how they have been doing. So the first one is the VUSA and the VJPN. So that's the Vanguard FTSE Japan. So as you can see from the numbers, it's almost a 50-50 weighting between them. But when I created it, it was supposed to be 80-20. But what I like about InvestEngine is that you can override that whenever you want. I see that since last using it, they have this button here, which shows you the net contributions, and you can choose to actually show it or not. So the net contributions actually shows you how much you actually deposited, and the rest is either a plus or minus based on your portfolio performance. So over the past 6 months, as you can see, it has been doing really well, and I'm not too surprised because a lot of it is in the S&P 500. And you guys will probably know that the S&P 500 over the past 6 months, so ever since March, has gone on a massive bull run, and for that reason I am up in this portfolio by £6.04. The FTSE Japan, surprisingly to me, has also gone into a massive bull run, and in my portfolio it is up by 8% or £9.49. So now what I wanted to actually show you was that InvestEngine has a new feature here called the savings plan, and you can actually use this to regularly invest. So because I highly recommend this for beginner investors, for investors who just want to put their money in and not worry about it, you can actually use a saving plan to regularly invest into different portfolios, weekly, fortnightly, which is every 2 weeks, and monthly too. By setting up a plan, you're enabling auto invest for this portfolio and instructing InvestEngine to invest after each top up according to your chosen ETF weight in the next available trading window. They've also partnered with TrueLayer, which integrates with your mobile banking app, and it can automatically kind of communicate back and forth between them, giving you a lot of control over actually setting up your savings plan weekly, fortnightly and monthly, and you can start investing with as little as £10. Now I personally, as like I've always said, I'm a very manual person, so I would never use something like this, and I would definitely recommend it to a lot of people. As we all know, regularly investing, even when the markets are going down, is a good way to build investing habits, and in the long run, if you keep investing, chances are that you're going to have a whole lot more money than you actually started, which is the goal for investing. So the next portfolio is a mix between the VUSA again and the VJER. So as you can see, again, almost a 50-50 weighting, with the S&P 500 being 53 and the Vanguard FTSE Japan being 46. So the S&P 500 here is only up by 1%. So like I said, in this portfolio, I don't actually time the market and I just buy whenever. And I honestly think it's not a long enough time horizon to be showing you this update, but I wanted to show it anyway, because in the short term, so this portfolio is quite new anyway, you're going to just not see that much difference. But if you consistently invest, especially when it goes down, you're going to actually see bigger increases. This is not something that I've done so much in being consistent with this portfolio because I keep making new portfolios. I am up 1% on the S&P 500 and a massive 19% on the Vanguard Germany All Cap, because if you see, I actually bought it for a super good price. I actually couldn't have timed it even better myself. I bought it right at the bottom here, as you can see, which was really good, and that is why it's up by a big 19%. So that's a £7 increase. So my main portfolio, the one I've kept adding to over the past month, is actually the GSPX. That's why these aren't up that high, because I bought these at the peak and then I didn't continue to buy them. If I continued to buy, you would have seen a higher percentage for sure. So the GSPX, as you can see, has shown me a return of 12%, so that's a big gain of £63 just because the overall value is a lot higher. As you can see from the net contributions, I'm doing a lot better than that. So you can see that the green line is a lot higher than the blue line. Let's go to the past month to illustrate that even clearer, and you can see over the past week the GSPX has absolutely blown up. So in this graph you can see when I bought it, so I'm consistent with this. I buy even at the highs and even at the lows, and as you can see, that is why I am making a lot more money on this than my other investments. And lastly, I also made a portfolio with the German DAX, as you can see here. That is down by 4.5%. And again, I don't think I was consistent. I only bought one into it. And again, I bought it at the peak. But like I said, if you're consistent, you would have bought here and you would have bought here. And when it goes up to here, you make that percentage amount back. That is how investing works for the long term. And that is why you should stay consistent. Please do not be put off by the fact that you buy something and the price keeps going down. That is a gift for you. If you bought trainers and the price went down, you probably wouldn't be happy. But in terms of stocks, when the price goes down, that gives you a better chance to buy in with a lower average price. So if I go into my analytics, you can see how everything is spread out. So I have 7 regions that I'm invested in: North America, Europe excluding the UK, Japan, the UK, emerging markets, Asia excluding Japan, and the rest of the world. This is because I mostly am invested into the S&P 500, which is North America, and then I'm invested into the FTSE Japan and also the FTSE Germany All Cap. InvestEngine also lets you see what kind of sectors you're in. So in terms of sectors, I'm actually quite well diversified, which is quite surprising to me. So I'm actually 26% industrial, 19% technology, which is surprising again because I thought I was technology heavy because of the S&P 500, 12% financial, 12% consumer, 5% healthcare, 2% energy, mining, property, other are the rest. So in terms of actually holdings, and not in terms of market cap, but in terms of how much invested, I have the most invested in Apple, then Microsoft and Alphabet. This is not surprising because this is mostly just the S&P 500. And as you can see, Nvidia has been creeping up because of their recent $1 trillion evaluation, which kind of dropped down, but you know, they did hit $1 trillion. And the AI boom has been very much driving up the S&P 500. So in terms of the future, I think I would want to invest in a new ETF. So the ETF that has really caught my eye is the FTSE 250. And one of the reasons why is because it is so volatile. So in my opinion, if you do actually invest into something volatile, you're buying high and you're buying low. And that is where the money is made in the long term, in my opinion. Because even though something might stay flat for a year, as you can see, the FTSE 250 has been very flat for a year. But investing regularly, you would have been making a nice return because of all the dips and all the peaks again. But also I think that FTSE 250 is trading very low, so it's trading very close to what it was after the pandemic, which if you account for the massive amount of inflation is actually kind of lower than it was trading before. But anyway, going forward, I'm probably going to be buying the FTSE 250 instead of the GSPX, but I'm going to keep the GSPX anyway because I do think that that will go up too. But I do think we're on a trajectory of just going up and up, so I will be benefiting from the increase in value in that, but I don't want to be putting my money into it right now into a bull market because I do think I will be happier putting my money into the FTSE 250, which also has a higher dividend yield. So after filming the entire thing, I realized I wasn't actually recording my screen on my phone, which is super annoying. So the video you watched might have been a bit weird with things not moving. But anyway, make sure to check out some of my other videos and I will see you in the next video.